To keep yourself updated, subscribe to Indigo Learn and click the bell icon and download our app OneFin to start learning on the go.
In today's class, let us talk about different types of cryptocurrencies. So whenever I say there are multiple cryptocurrencies available, normally my students ask me, why do we have different cryptocurrencies in the very first place? Can't we have just one cryptocurrency and use it worldwide? So let me ask you one more question. Why do you have different types of mobile phones? So there are different companies which sells different types of mobile phones. Why don't we have only one company manufacturing mobile phone? Well, all the mobile phones answers the basic functionality, or they provide the basic functionality. For example, with every phone you can make call, you can receive messages, you can email somebody, you can watch YouTube videos, but certain phones offer certain additional capabilities. For example, if users' preference is more about security, or if they want to show off that they have an expensive phone, then they would go for Apple. But on the other hand, let us say that somebody wants a good camera, okay, if somebody wants a very good camera, then let us say they would purchase Oppo phones. On the other hand, let us say if somebody wants a mobile phone with a very nice display, then they will go for Samsung. And let us say if somebody is a gamer and they want a phone only for gaming purpose, then they will go for Asus phones. So though every phone answers the basic functionality, there are certain specific features that these phones offer which differentiate themselves from the other companies. In the similar way, we have multiple cryptocurrencies which will be used or which are used for multiple different purposes. So no two cryptocurrencies solve the same problem, because if two cryptocurrencies are solving the same problem, then people wouldn't go for the second cryptocurrency, they would stick to the first cryptocurrency. So there are more than 1500 cryptocurrencies that are in market. So normally what happens is a couple of engineering students, they come together and then they say, hey, blockchain is a very nice concept, so we also can create our own cryptocurrency. Shall we create our cryptocurrency? And then they'll fire up their laptop and type some code and they can create their own cryptocurrency. But cryptocurrency is not a product. Cryptocurrency should be used as a medium of transfer of value. So if they don't have a main product, cryptocurrencies will fail. That is where 97% of the cryptocurrencies that ever came up failed. So only 3 to 4% cryptocurrency sustained in the market because they actually had a use case. So now let us look at different cryptocurrencies. We are not going to talk about 1000 different cryptocurrencies. In fact, we will at the max we will talk about 3 to 4 cryptocurrencies just to get you started. After that, I will leave it to you to explore different types of cryptocurrencies and why we can, or what are the things that we can do with these cryptocurrencies. First, let's get started. The first one is the most popular one, the Bitcoin. So the Bitcoin was started by or invented by somebody called as Satoshi Nakamoto. So this is the gold standard or the cryptocurrency which is valued highest in the world at the moment. So if you can see, the price of one Bitcoin today is around $23,000. Okay. So in Bitcoin we use some terms called as blocks. So every block consists of multiple transactions and once in every 10 minutes this transaction gets processed. All these things, let us not talk about it. First, so we understood that there is something called as one cryptocurrency, something called as Bitcoin. Now, in the normal usage, people don't call it as Bitcoin, but they call an abbreviated form, something called as BTC. So whenever somebody refers BTC, it stands for Bitcoins. So now, when you open a block in a Bitcoin, it shows something like this. So a block shows you a hash value. And in previous classes I said that a block has to have a specific type of hash. It cannot have a general type of hash. It has to have a specific type of hash. And when we were discussing, I said I wanted a hash which starts with 4 zeros. But in reality, it is not that I want a hash which begins with 4 zeros, but in this case there are more than 10 zeros. So now how do you achieve this zero? That is by having a nonce. That is, you can see here, that is around 2 billion, 5 crore, whatever the value is. So now the person who found this particular nonce, why would he do so? I said it is not a simple exercise to find this nonce. You need to have a crazy amount of computational power. Now the question is, why would somebody calculate this if there is no reward? there is reward. So a person who calculates this nonce value is called as miner. So what he does is he does mining and he gets the reward. So now there are two rewards what he gets. Okay, he gets two types of rewards. The first reward what he gets is from the blockchain itself. So Bitcoin pays him certain bitcoins. The platform pays him some amount of bitcoin, that is at present it is around 6.25. So I can say it something like this. Let us say in a classroom a teacher asks 50 students to solve one problem, and the first student who solves that problem, for him teacher gives a chocolate. Okay, so this is something like this. So a block reward is something which is paid by the blockchain itself. Now when two people are transacting, okay, let us say A is sending money to B, let us say 1000 rupees. Now when A is sending money to B 1000 rupees, it is not free. Maybe they may not charge exorbitant amount of money, but let us say they are going to charge 10 rupees for this transaction. So this 10 rupees will be deducted and it will be paid to the miner. So miner basically gets two types of revenue. One is directly from the blockchain and another one is from the persons who are making transaction. So in the given block, okay, in this block, which is the block number, let's see, okay, it is 6,62,025. So this block was mined by somebody. Normally they put the name, but in this case it is unknown. So they don't know who it was who mined it. But so there are two rewards what he gets. One is the block reward, which is given by the blockchain itself. It is automatic. It is automatic. So he gets around 6.25 Bitcoin plus from the persons or from the people who did this transaction, they will pay this 0.56359769 BTC. So total how much is going to get? 6.25 plus 0.56, that is 6.81. Okay, and then fraction, this is the Bitcoin what he is going to get. Now you may ask, if there is 50 students who are doing that particular sum and finding the nonce value, whether only one person will be rewarded or whether we will also reward the other persons. The answer is no. In this case, winner takes it all. So if there is one person who wins, only he will get everything and 49 others will not get anything. Okay, so this is the block information, and let us talk about the block transaction. The first transaction is about the miner who is getting 6.25 Bitcoin. Okay, so this is the transaction. He is getting 6.25 Bitcoin from the blockchain itself, that is Coinbase. So you can see here it is a newly generated coins. It is a newly generated coins which is paid. Not just 6.25, it is 6.25 plus 56, that is 6.81 is paid to him. And then there are other transactions. So if you can see from this particular address, from this address, 40 bitcoins were paid to all these different addresses. And here there is one more transaction. In this case also 0.24 bitcoin is paid to all these different addresses. So this is about Bitcoin. Let us not go in depth. Maybe I'll take one more extra class to explain this entire page and we can discuss each and every keyword here. But for now, this much discussion is enough as far as Bitcoin is concerned. Now, let us go back. Let us go back and see what are the other cryptocurrencies that are available. Now, we have something called as Bitcoin Cash Explorer. Okay. So, one is we have something called as Bitcoin, and one is we have something called as Bitcoin Cash. So these two are very different. So I said earlier, every cryptocurrency has its own purpose. There is one problem which was not solved by another cryptocurrency. That is where a new cryptocurrency comes into picture. So for us to understand why Bitcoin Cash, we need to understand what was the drawback of Bitcoin itself. So now in Bitcoin, what happens is, let us say there are two persons. There is A and then there is B, and A wants to send money to B, let's say 1000 rupees. I said money won't be immediately sent to B. Instead, the particular transaction will first be sent to blockchain, where people have to approve the transaction. They need to verify the transaction and then they have to say this transaction is valid. Only if they say this is valid, the money will go to B. Okay, so this is how blockchain basically functions. This is how even Bitcoin would function. But the problem here is time taken by the blockchain to verify this transaction. So Bitcoin, it was started way back in somewhere in 2010, 9-10, and it became little popular only post 2012 and 13. So it has limitation as far as the speed of processing the transaction is concerned. I will give a actual number. So here we go and see average confirmation time. So whenever one person makes payment to somebody else, the transaction has to be confirmed by the blockchain. And you can see sometimes the transaction will get confirmed in 30 minutes. So this is the minute what they say. So sometimes 21 minutes, and you can see here sometimes the transaction will take around 487 minutes to get confirmed. So 487 minutes, in the sense 487 divided by 60, that would be around 8 hours. So imagine you are standing at a store and making payment to the store owner, and you are just waiting, because even store owner doesn't know whether the transaction is valid or not. So what he's going to do is he's going to make you wait. So waiting for 2 minutes is okay, waiting for 5 minutes is okay, but waiting for 8 hours is absolutely not okay. So this was a major shortcoming of Bitcoin. That is where they came up with something called as Bitcoin Cash, and then they said Bitcoin Cash can process much more transaction at once, because Bitcoin could process only transaction of 1 MB at a time. So one block at the maximum can be 1 MB, so you cannot load more transaction to it. So they said Bitcoin Cash could load more transaction and they can process faster than Bitcoin. So that is where we have something called as Bitcoin, that is BTC. Also we have something called as Bitcoin Cash, that is BCH. So these are the two cryptocurrencies what we discussed till now. Let us talk about another type of cryptocurrency, or another example of cryptocurrency, that is Ethereum. Now Ethereum is the most popular one, is the most trending one as of now. Now what is so special about Ethereum? When Ethereum started, it said let us print a currency, or let us mint a currency which is different from the traditional currency. When we talk about traditional currency, it is just to transfer values. So if I have 100 rupees, I can give it to you 100 rupees. So this is a traditional function of currency. They said let us make a currency which we can program. So they said we want to do a programmable currency. So in simple word, let us say that if I want to pay you money, not today but on your birthday, let us say your birthday is on 1st of April. So I will say I want to pay you money but not today, so I will time it and say that this particular 1000 rupees should go to you only on April 1st. So they said this should happen now, because the currency what we are creating is a programmable currency, so we should be able to program it in such a way that I don't have to send you immediately, but I can also send the currency at a future date. Now I know you will come and say, well, this is not such a great functionality. As on date, even normal banks also provide this functionality. For example, if I am an employer, I can give instruction to the bank and I can ask them that you release the fund on 1st of every month. So and the bank would do so. So this is not a great functionality. So when we talk about programming, we are not talking about a simple programming as to payment on a future date. Let me give one more easiest example so that you can understand it. Say there are two people who are betting on a cricket match. There is A and then there is B. And A says if India wins, B has to pay him 1000 rupees. And B says if Australia wins, A has to pay him 1000 rupees. So again, to clarify, if India wins, A will get 1000 rupees, and if Australia wins, B will get 1000 rupees. So this is the bet what they are having. But now the problem is A doesn't trust B, B doesn't trust A. So what will they do? Let us say they appoint S as the middleman. Okay, they will appoint one more person called as Mr. S, and they will say, hey, you are the middleman. So what S is going to do? He will say, look, give me 1000 rupees. So A will pay 1000 rupees to S. Okay, and he will also collect 1000 rupees from B as well. So with S, there is 2000 rupees as of now as a deposit which he is collecting from A and as well as from B. Now what S is going to do? S is going to watch the match. Okay, after watching the match, S will decide who won the match. Okay, so if India won the match, then what is he going to do? He is going to give entire 2000 rupees to A. Okay, but if Australia wins the match, then he is going to give entire 2000 rupees to B. Now the question is, will S do it for free? Answer is, he will not do it for free. Okay, so S is going to charge certain amount as transaction fees. Let us say he charges 50 rupees as transaction fees. So what A has to do if he wins the match or if he wins the bet? He will take 2000 rupees, but again he will pay 50 rupees to S. So this is how a traditional transaction would work. So they said, why should we bring another person in middle? Rather than person, let us replace the person with a contract. Let us call this contract as smart contract. So now you don't have to bring another person in the middle. All that A and B has to do is they should program it. So they will write a a line of quotes. They will say if, okay. So if India wins, 1000 rupees will get debited or will get deducted from B's account and it will be paid to A. To the contrary, if it happens other way around, if Australia wins, then 1000 rupees will be deducted from A's account and it will be paid to B. Now, this particular type of contract can be built on blockchain. Now, the question is, if you can have this particular contract, if you can write this particular piece of contract, question is, where do you keep this contract? If you say this contract I am going to keep in A's computer, if the moment A realizes that India is going to lose, he may turn off his computer. Same way, if you keep the contract in B's computer and if he realizes that Australia is going to lose, he is going to turn off his computer. So, if the computers are not on, then the program cannot be executed. Okay. To avoid this, what they do is they host this smart contract on a blockchain. They will say, not even my computer, not even your computer, let us host this contract on a blockchain. And blockchain will see who won the match. Now you may ask, how can blockchain identify whether there is any human sitting there and watching the match? Answer is no. In the contract itself, you can specify how do you determine the winner. For example, you can give the link of one particular website or sports website which says which team won the match. So a contract will open that website and it will check which team won the match, and on the basis of that, the contract will get executed. So once you host your contract on blockchain, nor A can cancel that program, nor B can cancel the program, and that program will be executed. So this is what blockchain promises to do. It says we are going to eliminate middlemen. We are going to eliminate the trusted third parties. Let us not have intermediaries. Let only A and B, peer-to-peer transaction, let it happen. So this is what is promised by the blockchain. So for you to do this, can you do it in Bitcoin? Answer is no. You cannot program or you cannot host a contract on Bitcoin. That is where they came up with this one particular product called as Ethereum. So Ethereum is a blockchain on which you can host these smart contracts. Now, for you to use that particular smart contract, is it free? Absolutely not. You need to pay blockchain some amount of money. You need to pay some amount of money, and this money has to be paid in cryptocurrency. Now, which cryptocurrency? Can I use Bitcoin to pay? Answer is no. You need to use their own cryptocurrency, something called as Ether. Okay. So Ether is the cryptocurrency of Ethereum blockchain. So we discussed what is Bitcoin, we discussed what is Bitcoin Cash, and as of now we discussed what is Ethereum. Now there is one more byproduct or one more product which is similar to Ethereum, that is Ethereum Classic. Now why do we have two different ones? Maybe I can explain you in the upcoming classes, but as of now we have discussed three major cryptocurrencies. Let us talk about one more major cryptocurrency and then we will stop our discussion there. Now let us talk about the last cryptocurrency for this class, that is something called as Ripple, RIPPLE, also denominated by an abbreviation called as XRP. Okay. So now what is the use case of Ripple? Now Bitcoin was for a peer-to-peer payment, then we had Bitcoin Cash which solved the problem of Bitcoin. It said I can process larger transaction. Then we had something called as Ethereum, also represented by way of an abbreviation ETH. But Ripple came up with a use case saying that, well, we don't want to give a peer-to-peer. Peer-to-peer, there are other cryptocurrencies, but what we majorly dream of is to provide a cryptocurrency for institutional use. For example, if somebody wants to make payment to merchants, if you want to purchase something but you want to pay to merchant, or if banks want to transfer from one bank to another or from one country to another, for this large transaction, they said our existing cryptocurrencies are not enough. So we are coining or we are floating our own entity, something called as Ripple. So this is the blockchain of Ripple, and here instead of the term block, we use the term ledger. So if you can see, it is a live environment and which is working in a super speed. So for every 3 seconds, one ledger gets created, and the number of this ledger is around 603206661. And if I open that, so there is all the details. This is the transaction hash. They also tell from who paid money to whom. So all these details are recorded. So this is the beauty of blockchain. That is, I can see the transaction done by anybody. Okay. And as a bonus, I know that I was supposed to end it here, but as a bonus, I want to show you one more cryptocurrency. This is my personal favorite, something called as Monero. Now Monero has a specific use case, that is it provides you much more security. It provides you much more security than Bitcoin. Normally in Bitcoin or in Ethereum or even Ripple, you can see who sent money to whom, not their exact name, but you know that money moved from one account to another account. But on the other hand, Monero provides you an extra layer of privacy. In this particular discussion, I wouldn't be telling what that particular layer of privacy is. All that you need to know is Monero is comparatively more secure, or it provides you more privacy compared to other cryptocurrencies. So if you ask what is the purpose of Monero or other cryptocurrencies, this provides you more digital privacy. So this was our discussion as to what are the different types of cryptocurrencies and why do we have these different cryptocurrencies. One message if you want to take away from this particular session, that every cryptocurrency has to have a purpose. It has to solve a problem. If it does not solve a problem, then that particular cryptocurrency company is bound to fail. Thank you.